All right, let's dive right in. We're talking about one of the biggest shakeups to the UK tax system in over a century. So whether you're an international professional, an investor, or even a Brit thinking about coming home, you're definitely going to want to understand what's happening.
That's right. For over 100 years, this special tax status called non-dom has been a massive feature of the UK financial landscape, drawing in talent and money from all over the world. But as of April 6th, 2025, it's gone. And this isn't some small adjustment. It's a complete rewrite of the rulebook.
So here's how we're going to break it all down. First, we'll talk about what's actually ending. Then we'll get to know the new system, called the FIG regime. After that, we'll look at a pretty amazing but temporary opportunity for money that was earned under the old rules. Then we'll see what's new for global employees. And finally, we'll zoom out to look at the new long-term picture, especially for inheritance tax.
Okay, so first things first, to really get a grip on where we're headed, we have to understand the system we're leaving behind. What we're seeing here is a huge philosophical shift. The goal is to make things simpler, more modern, and frankly, fairer for everyone who lives in the UK.
For decades, the UK had this thing called the remittance basis. You can think of it like a special VIP club. If you were a non-dom, you only had to pay UK tax on your foreign money if you actually brought it into the country to spend. Any cash you earned and kept offshore, it stayed completely off the UK taxman's radar.
So the real heart of this change is a switch from domicile to residence. Domicile was this incredibly complicated, kind of old-fashioned idea about your permanent home, often tied to where your father was born. The new system just throws all that out. Now it's all based on a simple, clear test. Do you actually live in the UK? That's it. And it means the new starting point for everyone is being taxed on your worldwide income. Now, to manage this big change and, to keep the UK an attractive place to be, the government is rolling out a brand new system. It's called the Foreign Income and Gains Regime, or FIG for short. And this is the headline. The old, complicated system is getting replaced with a new, very attractive welcome package. The FIG regime is basically a 4-year tax holiday. For your first 4 years in the UK, if you qualify, you will pay 0 UK tax on your foreign income and gains, and you can bring that money into the UK totally tax-free. And you've got to remember that number, 4. It's crucial. The old system could sometimes last for up to 15 years. This new deal? It is strictly a 4-year window. The clock starts the moment you arrive, and it does not pause for anything.
The path is pretty clear-cut. You show up after being away for a long time, you claim the relief for your first 4 years, and then, boom. From year 5, you're in the same boat as every other UK resident, paying tax on your income from all over the world.
So who gets this 4-year welcome, Matt? Well, it all comes down to this tenure rule. To qualify, you have to have been non-resident in the UK for at least 10 years straight. This is the one and only key to the door of this new regime. And it applies to everybody, whether you're a foreign national moving to the UK for the first time or a British citizen coming home after a decade away. But, of course, nothing's ever completely free, right? For any year you decide to claim this IGR relief, you have to give up a couple of standard UK tax breaks. You'll lose your personal allowance, that's the amount you can earn every year before tax kicks in. You'll also lose your tax-free allowance for capital gains. So, if your foreign income is actually pretty low, it might be better not to claim IGR at all. You really have to do the math. Now, this is where things get really, really interesting. What about all that money people earned under the old non-dom rules that's just been sitting offshore? Well, the government has created a massive but very temporary opportunity.
This is the multi-billion-pound question. Thousands of people have years, maybe even decades of foreign income and gains parked in offshore accounts, all perfectly legally. What happens now if they want to use that money in the UK? Well, normally, bringing that money home could mean a tax bill as high as 45%. That is a huge barrier, and it's why so much of that wealth has always stayed offshore. But the government wants that cash in the UK economy. So, for a very short period, they've opened up a special gate, and the toll to get through is much, much lower. And here it is, 12%. That's it. A flat rate to bring all that historical offshore money back into the UK. It's called the Temporary Repatriation Facility, or TRF, and it is a truly remarkable one-time offer. But you gotta be quick. The clock is already ticking. You get that amazing 12% rate for only 2 tax years. In the third year, it jumps up to 15%. And after April 2028, the window slams shut for good. This is a classic use it or lose it deal designed to get people to act now.
Okay, so what does all this mean for people who travel for work? Well, there's a key tax break for them called Overseas Workday Relief, and it's been totally redesigned to fit into this new world. So, the relief now lasts for 4 years instead of 3, which lines up perfectly with the new FIG regime. And, this is huge, you don't have to keep your overseas earnings offshore anymore. You can bring it all into the UK tax-free. But, and it's a big but, there's now a limit on how much of your income qualifies.
Yep, there's a new annual cap on how much of your foreign earnings you can protect from UK tax. It's the lower of either 30% of your total salary or £300,000. So let's say you make £500,000 a year, and 40% of that is from work you did abroad. That's $200,000. Under the new rules, all of that could be tax-free, but for the really high earners, this new cap is definitely going to bite. So it's simpler, but maybe not as generous as it used to be.
And finally, let's talk about the long game. Because these changes aren't just about income tax. They completely overhaul the rules for what is often the biggest tax bill of all, UK inheritance tax.
Just like with income, those old, messy domicile rules for inheritance are gone. They've been replaced by this really simple, residence-based timeline. For your first 9 years here, only your UK assets are in the crosshairs for inheritance tax. But the moment you hit your 10th year of residence, your entire worldwide estate gets exposed to the UK's 40% IHT rate. It gives people a very clear 10-year window to get their estate planning in order. Okay, let's just boil this all down. The key takeaways are the non-dom system is dead. In its place is a 4-year tax holiday for new arrivals. The magic number to qualify is 10 years of non-residence. There's a very short window to bring old offshore money back for just 12% tax. And finally, a new 10-year countdown starts for inheritance tax on your global assets. Look, this is so much more than a few tweaks to the tax code. It's a fundamental change in strategy. The old playbook of keeping wealth offshore forever has been torn up. The new game is all about grabbing the benefits in the early years and then planning carefully for full integration into the UK tax system. So the real question for anyone this affects is, are you ready for this new reality?